Our Value of Advice ebook and podcast series is proudly sponsored by MediHelp.
Hi, this is Tony at Cover, and I'm speaking to Peter Hewett from Hewett Wealth. Also, Peter is a past winner of the Financial Planner of the Year award with the FBI, and we're chatting just a little bit about the industry, getting an overview, your thoughts on the history that you have in the industry, and a bit of encouragement for others in the industry to continue adding the value that they do. So thanks for spending time and giving us a bit of your insights.
Thanks so much, Tony. Good to chat.
Absolutely. So maybe as a backdrop, give us your elevator pitch. Who's Peter Hewett and why Hewett Wealth?
Okay. Yeah, look, I've been in the industry for over 30 years. I actually started out in the fiduciary services industry, moved into asset management for a number of years, and then ultimately moved into my own advisory practice, private practice. And really the idea of setting up Hewett Wealth was the route that I had taken over the years, the learnings and growth that I had experienced over the years, I think allowed us to set up quite a sustainable practice. And in the 8 years, we've grown incredibly. We've opened branches in Johannesburg, Pretoria, Cape Town. We've built a very significant base of assets, but more importantly, we've got an amazing client base. So it's been a good journey.
Absolutely. And how have you seen the industry evolve over these years? What were the sort of milestones that you think happened to bring us to where we are now?
Yeah, look, the industry over that period of time has changed drastically. A lot of the FAIS legislation didn't exist when I started out. So there's been significant change, but most of it, to be truthful, for the better. Over the years, you've found that there's been a lot more focus on treating customers fairly, on compliance, on making sure that clients understand the value proposition, the outcomes of the products and services that are offered, and a lot more transparency. So I think there's been significant regulatory change, and I think that has favored the industry because it's professionalized it to a large extent, which I think has added value to the industry as a whole. There is naturally a bit of a challenge with the level of regulation. I think the speed of change has become challenging for a number of advisory practices to keep up with those changes and to make sure that their businesses are fit for purpose. But I will say, I think if you integrate technology effectively within the business, you can overcome a lot of those regulatory hurdles or challenges. Outside of that, I think the industry, with the Financial Planning Institute focusing on getting advisors to the level of a CFP, I think has added quite a lot of value. You're getting a lot more professional advice, and you can put the background and history and technical expertise of your advisor, which in the past you were exposed to a very broad market with very limited understanding of what was being sent to you in terms of advisory services. Yeah.
Absolutely. And just in terms of the same view on what do you think were the best changes that were made to products over this period? And what do you like most about what we have today?
Yeah, look, from a product perspective, from an advisory and a client perspective, there's an upside to the fact that there's a massive range of available products that can suit almost any need. So the range of products and services available has expanded massively. The downside to that, of course, is you also end up with too many choices and too many products, which can be a challenge. And then, of course, all of the bells and whistles that go with some of these products. So if I look at the industry as a whole, I think generically it offers a very good value proposition. Where we do have to be careful is to make sure that clients do understand what is being offered to them in terms of risk, liquidity, tax, intergenerational transfer, all of this type of thing. So the complexity level has increased quite a bit from a client and an advisor perspective. What we do is we do due diligence on every product that is sold within the business. So we have a product approval committee. We don't let any product get sold within the business unless it's been approved and pre-vetted. And obviously the benefit of that is that the client can take fair comfort in what he's purchasing through us. The one area that bothers me in the product space, I think, is complexity is sometimes overdone on some provider products, and clients don't often understand exactly what they've purchased. We come across that quite often. And then the other thing is that there's still these, what I call legacy products available, these committed products
Mm,
where the
mm,
client enters into an agreement, and if he alters or varies that agreement in any way or terminates, he gets penalized quite significantly with financial penalties. Unfortunately, those types of products are still available. We generally look for products that are relatively simple to understand, that deliver the outcome that the client's looking for without too many bells and whistles. And the other thing we do is we don't sell products that have upfront commissions and costs built into them where the client can be penalized later. So
mm, mm.
that's the only area where I think the industry could improve a little bit, is by gradually getting rid of those products that have significant penalties for clients.
Yeah, yeah. No, that's still an issue with us. And as you say, especially the legacy stuff, to evaluate those. So, Peter, just from your experience over the past, and especially, I would say maybe the last sort of decade and so on, um, guys who are in a practice independently, maybe two or three of them together, etc. What are your sort of few points of wisdom that you can give them to build, to grow their business and build a sustainable, not just a sort of three guys working together, but an actual business?
Yeah. So I think historically, financial planners generically worked on commission, and they built a business that was effectively a sales business. My view is that that has changed. I think you are actually building a relationship business. We, for example, charge ongoing fees only on an asset basis. We don't charge upfront fees. We charge for the planning so the client understands the value that he's receiving. And then, of course, the other thing is that within the business, once you've built a value proposition, you need to make sure that your infrastructure is geared to manage and implement that value proposition. And you need to make sure that you keep your business totally separate from your private affairs. So again, many advisors had it as a private little business, and they run all their personal
Mm.
expenses, etc., through their practices. My recommendation is build the business as a business. So build it with a very structured value proposition. Make sure all your processes, systems, and so on align. Make sure that your accounting is done very accurately. Make sure that you are reporting back to your various shareholders in the business. Make sure that you have a buy-sell agreement in place with your partners so that there's continuity. Let your staff know what the continuity plan is to make sure that they understand there's continuity in the business that gives them stability. We have, in our business, we don't pay commissions, we pay salaries. So all of our staff, including our advisors, are all salaried individuals with annual discretionary bonuses. And the benefit to me of that is we built it as a proper business where they don't need to be concerned about their revenue stream varying significantly. They get a fixed monthly salary, they earn comfortably, they look after a client base, and because they don't earn commission, they're not incentivized to sell any specific type of product. The advice to me becomes a lot more independent because they don't benefit from one product versus another in terms of their personal revenue streams.
Mm. Yeah, no, that makes a lot of sense. I think that, and it goes with any entrepreneurial venture. So many small entrepreneurs make that same mistake.
Yeah.
They don't separate the two. There's one credit card and it buys everything instead of.
Which then makes it impossible to value the business. The ability to sell the business to your joint shareholders or to any other party becomes very difficult. And it also makes it very difficult to manage your business month to month from a cash flow point of view, because you don't have an understanding of your true income and expenditure from a business point of view.
Yeah.
So
No,
yeah,
yeah.
my view is run it as a proper formal business, structured
Mm.
business.
And Peter, just coming back to you as a person, how do you stay up to date? And CPD is
Mm.
like such an incorrect way of necessarily looking at it. Because guys just, I need those CPD hours instead of saying it's continuous professional development.
Yes.
How do you treat that for your own and for your business?
So within the business, we cover the costs of any required training, further studies. So we encourage further studies for all of our staff. And from a CPD point of view, it's become this industry bugbear. I've got to get my CPD points. I don't think that is really what it should be about. You have a value proposition, and to deliver that value proposition, which should be very clear, you need certain technical skills and knowledge base, and that your CPD program that you have within the business should actually be aligned to delivering the knowledge and technical skills that you need to deliver your value proposition. So it's not just about going and getting a whole lot of points so that you can tick a box. You should actually be building a CPD strategy that says, I attend these specific ones because they focus on the areas where the technical competence or the knowledge base that I require is being espoused by whoever's delivering that CPD program. We tend to avoid a lot of the quick fix CPD programs, and we look for the ones that really do add value so that we can pass that value on to our clients. So it should be part of your normal learning and development as part of your business.
Yes, yeah, because if you need, for instance, 15 points or 15 hours, those are 15 hours that you can spend on developing your knowledge, your understanding, etc. And then on the other hand, if you think of 15 hours of development in a year, it's nothing. You're really,
And we all do a lot more.
Yeah. No, absolutely. And so maybe then just in imparting your advice to guys who are a bit despondent, who feel that the industry's become too difficult, that there's too much pressure on them from an admin, a compliance and all of that. How would you encourage them?
Yeah, look, this is a really great industry. If you think of it, what is your job? Your job is to build relationships with people to the point where they really become very close friends, and to look after them and their family for their lives. What better job could you really think of? It's a lovely job. It's you beautiful relationships with a lot of people. So the industry itself is a great industry to be in. But what I would recommend is, obviously, when you want to build your business, design your value proposition, make sure that you have the ability and infrastructure to deliver on that value proposition. Make sure that you have the right systems and technology in place to manage that, and understand that you're not going to build a practice in a year. So it is not an easy thing to go and build a practice from scratch. A lot of guys entering the industry will build a small base somewhere, possibly with one of the corporates. Many of the corporates now do offer models where the advisors are allowed to leave with their clients under certain conditions. If you have a development model that you can move into to start building your base and then go independent, I would recommend going that route. It does make it easier. Or if you've got some startup capital, it's totally doable to go and build a practice. And the other thing is, just treat your clients absolutely fairly. Make sure that your fee structures are honest and reasonable. Make sure that you're transparent about everything that you're charging a client and what your value proposition is about. And make sure that you implement on that basis. And as I say, in 8 years, we've built a practice from 65 million to over 3 billion. And that is literally just through referrals, through building true long-term relationships with clients.
Yeah, absolutely. There's nothing like a long walk in the right direction.
Yeah. Yeah. And from a
Absolutely.
regulatory point of view, truthfully, there are a lot of systems available in the market that can aid your ability to comply with all of the relevant regulations. We've obviously got the COFI bill coming soon, and that is going to present additional challenges. But I think ultimately you'll find, historically, when FAIS was introduced and components of FAIS were introduced, it seemed very daunting, but the end result was actually relatively manageable. So I think don't have a knee-jerk reaction to all that's expected of you. The industry is designed to be sustainable. The regulators do understand that they need to keep it sustainable and that they can't increase barriers to entry too much. There is ultimately a quid pro quo between the industry and its regulators. Yeah.
Keep doing the right thing. That's it. Yeah.
Absolutely.
Perfect. Peter, thank you so much for that input and for sharing some of your experience and your wisdom over the years. I will definitely be speaking to you again soon.
Fantastic. Thanks very much, and look forward to chatting again.
Yeah, Peter, thank you so much.